material inflation, I do understand that there has been inflation, and you did mention about that. But given that food and refreshment is a category, and that too in a festive quarter, we have seen a low single-digit volume growth. Could you quantify what is the material inflation that you have seen in Q3, and also is it some kind of a structural slowdown that we are seeing?
See, on inflation within foods and commodities, what really impacted us was fresh milk, which impacts the impact on Horlicks, both skim milk powder over a long-term period, and fresh milk, because when you consume a cup of Horlicks, apart from putting Horlicks, you also put a cup of milk into it. Within food commodities, coffee and sugar have seen inflation. In fact, coffee, when you look at last 2 years, cumulatively is a 70% inflation. And which is why, as we have taken price increases, not to the peak of inflation, but we have taken price increases to respond to this high inflation. We have seen growth in terms of business. So our coffee business grows in double digit, but it has led to impacting of volumes, and volumes have declined. Similar has been the impact on HFD as well, where we have seen growth, but volumes have declined. That is the overall impact of commodity, which I spoke about in terms of F&R business for us. Now, skim milk powder has started to moderate compared to where it was, and year on year now we see, in fact, small decrease. Tea commodity overall, we had spoken earlier, has moderated for last 2 years. In fact, we've seen deflation in tea commodity, but there the market is downgrading to plainer teas, to the loose teas. So there's a mix of commodity inflation and downgradation, which has impacted. Now, as we move forward, the point I was making earlier, inflation has moderated in foods commodity as well now. And hence, going forward, if at all this situation continues of commodity, this moderation will help volume recovery. The way we have seen in 3 quarters of the business, home care and beauty and personal care, where we are now seeing in our business mid-single digit volume recovery, because there's a meaningful correction which have happened in commodity cost. That has helped us to take prices down, and we have seen volume recovery. That should also happen in times to come for the foods and refreshment business as well.
Right. So how many more months before we can see a material uptick in volumes? Is there a projection that you would like to put out?
No, I mentioned that the overall, apart from commodity impact, the point that Rohit and we mentioned earlier, the pace of recovery will be dependent upon rural income growth. It will depend upon how the yields from the winter crop comes out. Those are factors which will end up determining the pace of recovery. But we know that the point Rohit was mentioning earlier, the premium portfolio, the investments that we are leaning in, the increased government spending, the better recovery which has happened of the winter crop sowing, there are those factors which should help overall environment, operating environment to keep improving.
Right. While you did speak about the macro part of it, but I would also like to know there are a lot of issues with the general trade, right? There has been a slowdown in the general trade, and you did take a lot of action in terms of revising your margin structure. Can you tell us that how is it going? Do you what kind of initiatives you are taking to improve your general trade business?
So let me take that the question specifically on general trade. Let's first start by saying that the general trade or traditional trade or distributed trade, as we call it, is a very, very important part of our business. We've had long-standing strengths in that business. It's under 70% of our sales, and we consider it extremely important. We've been investing in our general trade capability for many, many years. We have invested in technology, capability, processes. We have a distributive inclusive model and a distributive progressive model. And we have always been working on making sure our distribution system and our distributors are contemporary and are future fit, because we believe this is absolutely an important core of how Hindustan Unilever operates. It's a competitive mode. As a consequence of that, we have been wanting to, in certainly larger cities, have a system that incentivizes for higher earning our distributors to sell to more stores, deliver the next day, make sure that they sell market development, assortment, things that consumers are not willing to buy, and make sure they don't get compromised in the selling systems. And all of this was wrapped up in this very progressive future-ready model that was tested for almost an entire year. And then, given the fact that we found a very favorable response, we also know that the distributors actually increased the level of earnings. We've then extended that to the top 100 cities, where it's been 3 months in operation. We have good signs. So it's just a very positive win-win for our distributors. It's a very positive win-win for our customers, the Kirana merchants, who are our bedrock of our economy. And it's also a very important win-win for the company, because this way we get more growth. So all in all, I feel it's the right thing to do, and it should be virtuous and healthy for all people concerned in this particular value chain. So that's really my comment on the margin structure, if it helps clarify where we are coming from.